Wednesday, September 17th, market analysis, Stan Ehrlich, and we have a very interesting day today. Not just stock indexes, interest rate futures in particular, and precious metals as well. The MES, we start out with futures of the stock indexes and then go to futures markets and then to some stocks. So MES today, the S&P 500 miniature, couldn't make higher highs for the move from yesterday's high, is overbought, and dropped off very sharply, very shortly after what was expected, a 0.25 decrease in interest rates. No surprises, except the market didn't hold very well. On the other hand, we didn't close near the low of the day either. It came back reasonably well just before the bell rang. So you don't have a bearish engulfing, but you do have the lows of the previous 3 days broken, but the close is good. So I'm not super satisfied, but I do think we're starting to head south. No change of opinion. I talked about that the last couple of days because of the overbought condition. I totally expect 6,300. Back down to the lows we had in early August, a month and a half ago. And very, very possibly lower than that. Remember, I'm trying to justify the beginning of the break into the October lows. Next, we've got the 5-minute chart on the E-mini and giving you a perspective of how significant today's break was at the lows. And then it came back pretty good. But if it fails again, starts to get down to or close below today's lows, that's going to put some concern. Next, same kind of commentary on the spider, but the high yesterday in the spider was 661.78. Today's high was 661.72. 0.06 below the bearish engulfing AR sell signal yesterday, and the market did close a tiny bit lower. Not that big a deal, half a point, but it did take the lows out of the 3 previous days. Still, a bit more evidence pointing down than anything else. Next, the whiplash because of the Fed's announcement at 11 o'clock California time. Next, we have the QQQ, daily data. Basically the same thing as everything else, but it didn't come back quite as well, but you can't say the thing fell apart and stayed that way. It did break down pretty darn good at the low, but it came back in all the indexes fairly nicely. Next, we've got the 5-minute data. Even managed to make a new high for the whole day fairly late and then sell off a bit to lower. Next, we have the NASDAQ futures contract, and it did basically the same thing. Took out the lows of 2 or 3 days back, still overbought territory, didn't gain any ground, didn't lose much either. And there's the 5-minute chart. Managed to almost make new highs toward the end of the day and then settle back a bit. A lot of volatility. That's increasing average 2 range, ATR. Next, we have an outside trading range day almost on the YM with a higher close, even though it made a new high for the whole move. And watch this. The high today is 46,637. That's 637. The high back on December 4th of last year was 46,639. It's a high today, 2 ticks under the high made 9 months ago. This is a double top if I ever saw one in the making, possibly. This is very bearish if it pans out this way, because you need to break below the low in April. And then you're only halfway down. So I'm not expecting that. I do think that we're still topping out. I totally expect a break. I would say something in the ballpark of 50% of this last rally from April until today. and into the October lows. YM, a lot of whiplash. Look at that thing whip back and forth in a very short period of time. I think it was like 20, 30 minutes. And then it finally settled out a little higher on the day. Next, we got the Russell. It almost had a bearish engulfing after substantial new highs and closed way below the highs of the last 4 days. Not strong enough for a breakout. In fact, it looks like exhaustion strength or a bull trap. Next is the volatility on a 5-minute chart. Okay, watch this. Bonds have an outside down day, bearish engulfing ER sell signal. I hope the high of this rally. If we see the bond market cooperate from this point forward, going down to, I expect somewhere in the neighborhood of I'll call it 13. That's not a huge break. It just went up that much in the last 2 weeks. But it certainly is not particularly conducive of lower rates right away. Maybe that'll be delayed. Also, we have another bearish engulfing ER sell signal at today's high for today's range on the notes. That's the second one in the same price range in 2 weeks. I'm turning bearish, obviously, on interest rate futures, but not necessarily a huge break. Next, crude oil. Oh, doji, inside day, caught between a rock and a hard spot. I've been saying that for a while. So far, I'm right for a while. I'm waiting for a breakout or some sort of signal. Now, I do think the rally we had in natural gas was probably it. But today we came close to making another minor new high for about a month. There's nothing wrong with this rally, even if it does go up some more, because the head and shoulder top formation that I've been outlining, since somewhere probably in the neighborhood of May, June, is still good. So I'm still looking for lower levels and a significant turn down very soon. It might make a little bit more strength short term. Inside doji, heating oil, rock in a hard spot, waiting for signal or breakout. Next, we have an outside down day in gold. It is a bearish engulfing ER sell signal. It has been overbought for about 2 full weeks, maybe 3. A lot longer than normal, but that's it. This is my bearish signal I've been waiting for. Hopefully, it's going to turn out to be a good one. It could be very profound. I'm looking for a very bare minimum, 35 to 37. Very possibly down to 33, a little below 50, 33 sub 50. Next, big break, but no reversal, and silver was overbought. A little divergence on the RSI. Higher highs in price, but not on the indicator. So a little bit of a downside breakout would be at 4,100. But it's not quite there yet. I think it's going to happen probably next day or two. So I'm turning bearish. Platinum, not super bad. Minor new lows for a couple of weeks and a half or so. New low close for a couple of weeks, not by much. I think it's going to slip some more. It's doing a little damage. Looking for lower levels. I'll try to get more precise. Next is high-grade copper, pulled back quite a bit. Yesterday and the day before, new highs for a while, poopered out. So are we developing a little bit of an upper slanting channel? Maybe. So far, so good. Is it worthwhile following much? Maybe for the downside breakout, because that's going to produce another leg down. Otherwise, I'm waiting. Soybeans, a bit of a dip back, same range as yesterday, basically. I'm still looking for higher levels. I think it's going to hold a little bit lower. A close below 10.20 is going to totally change my mind short term. Next, soybean oil, a little bit of a dip. Erased the rally for the last 3 or 4 days. Still looking for this head and shoulder bottom to work. The low today and the close was back down to the neckline. I really can't afford to let it go below the neckline again for a day or two without toggling back and forth between head and shoulder or no head and shoulder. Not good. Next, soybean meal. Nothing going on. Waiting for a new high close, new low close. I think we're on the way up. Next, corn. Almost a new high. Slightly lower close. been doing pretty good. Didn't get overbought yet. Frankly, I think there's a good chance it could dribble back just a little bit more, but I'm looking for new highs in a couple, 3 weeks or so. Wheat, kind of the same story. Wished it would have got up and stayed above today's high. That would have been a new high and a new high close also for about a month and a half. But it stopped right smack dab at that level and pulled back down some. I'm still liking it. I think you can call this a small double bottom, maybe. Not the best I've ever seen. We did get a bullish engulfing at the bottom. It wasn't oversold, unfortunately, so I didn't get a green ER buy signal, but it was close. I'm friendly. Shell, tested support, almost breaking the rock on the bottom. There's the hard spot up above. Not quite yet. I think it's going to break down. Next, a little double top possible in Apple. Pull back a doji, no big deal. Still a higher close, but not by much. Looking for a dip down. Next, we have an outside trading range day in overbought condition, but the close was higher on the day by a little bit in Tesla. This could very well be one of my bass-backwards reversals that are very rare. It's the right condition. Everything is right for it, including a potential upside exhaustion gap 2 days ago and a little breakaway gap, sort of a combination exhaustion or breakaway, I would have to say, a day before that. A nice gain from, 370 up to 4.25. Nice. Significant percentage, but this kind of price action today oftentimes produces the beginning of a down move. Next, and there's gaps to close. Well, how about that? What was the high of the gap that we needed to reach today to close the gap? That was the low on August 29th, which was 173.15. So that price or higher will do the trick. Today's high is 173.20. A nickel extra. Closed the gap, turned around, came back down, closed $4 lower on the day. One heck of a great example of gaps being closed. I keep telling people gaps are like a black hole in space. They tend to suck the price action back into them. There's a pretty significant percentage of gaps that occur that are closed within a few days to maybe a week or two. It's one of the tools I like to watch. That would have been a short sale right about the high of the day. Next. And we're back to the E-mini. Remember, I think we have some bearish activity in line. I've been reading articles by other market experts that I believe in and trust and have monitored over decades. Have a great day and profitable trading to you.